Welcome to the Techno Fundamental Report for December the 7th. Jesse Livermore, one of the greatest investors of all time, operated back in the 20s and the 30s. He had a lot of wisdom, and he said, "A prudent speculator never argues with the tape. Markets are never wrong. Opinions often are." Kind of on the same vein, my friend Mike Santolo writes, he says, "But the fact of the matter is, if you wait until there are no uncertainties out there, you're likely to be waiting a long time before buying. And when you do it, may be near a peak of some sort. You have to trust to some extent that the market's ability to look 3 to 6 months down the road is often more accurate than even the best economic forecasters. So if you wait for the perfect time, you're probably buying at a peak. So what the prudent speculator does, he doesn't argue with the market. He listens to the market. That's the whole point of trend following as a strategy. Now, I wanted to show that the American shoppers, which is in the Wall Street Journal, have plenty of dry powder. Consumers say they aren't upbeat, but they will keep cash registers ringing this holiday season. Now, the unemployment numbers are very positive. I mean, everybody has a job. The financial conditions index is showing some of the best improvement in many years. So, we've gone through roughly 2.5 years of difficult markets because everybody's been worried about a recession. I just don't see it. Now, maybe it's coming. It may come tomorrow, but we don't see it today. One of the important things to do at this point is to keep an eye on the IPO market. The process of offering shares of a private corporation to the public in a new stock issuance for the first time. So you get into an early stage situation where hopefully the company will grow. So I have a couple of examples here. The way to handle an IPO, I believe, is to wait. Don't buy on the day of the IPO listing. Wait a while and see if you can see a breakout of some sort. Because what tends to happen with the IPOs is the insiders will, the stock will usually rally on the day of the offering and usually in the short term. But then what starts to happen is the insiders start to dump shares because they want to diversify. They've been building the company forever. So with Amazon, for example, we picked up this buy signal right here back in 1997, and you can see how the stock reacted. There was really no slump of any kind. There was not a lot of insider selling back then. Now with Apple, a little different story here. It wasn't the IPO, but it basically when they invented the iPhone, which was right in here, the company basically reinvented itself. It became a wholly different company. Now also be aware of hype, especially with IPOs. Here's one called Virgin Galactic. It was hyped up. I had a lot of calls about it. What happens is the stock will take off, and then reality sets in, and basically you can see what's happening here. This was the old 3D systems. This was that 3D printing, which was so hot. This is Canopy Growth. This was the marijuana hype that really kind of fell apart. So just be aware that when you look at a company, really check it out because a lot of this stuff is hyped. Now I wanted to talk a little bit more about interest rates. You can see here with the 5-year Treasury, definitely in a downtrend. The power index is giving a very favorable reading here. You can also see here just the graph of the Treasury yield of the 5-year Treasury actually breaking below the 200-day moving average. So interest rates seem to be normalizing, and that's what's really causing the market to rally. Now, I also wanted to mention the Copic Index. This was an indicator I introduced earlier this year. The whole idea of the Copic Index is to factor in time. It factors in human behavior. And basically, the whole idea is that when the Copic curve goes below zero and then back above zero, that usually is an indication of a market bottom. So the whole purpose of the Copic Index is to call the market's bottom. So you can see here back in 2009, the market bottom, Copic Index gave a buy signal. Here we actually, it's not a buy signal, it's just an indication of a market bottom. Here back in 2003 after the dot-com bust, got a similar reading, and back here in 1990 another similar reading. So I think the Copic Index so far has been very useful in this situation. Volatility Index, wanted to mention the Volatility Index. It's really getting down into a very, very low reading. I went back to 1990 on this graph, and you can see that when you get below 15 on the Volatility Index, that's usually, the market tends to have a good period. So we, below here, market has a good period. Below here, nice period for the market. And we've gone below it for the first time in quite a while. So the Volatility Index, or the Fear Index, is giving some positive readings. Excuse me, I've been getting over a cold this week. Crude oil is really dropping. I mean, we're almost into a down, we are in a downtrend on the trend meter. And also the price of oil broke below $70 a barrel. And if you can remember, it got up to around 90 and everyone was screaming it was going to 100. Well, it didn't, so that's that. Aggression Index continues in an uptrend, so we feel positive about the growth stocks here. New lows on the New York Stock Exchange, well under control. Sellers seem to be drying up here, so the main thing we need to look for now is getting higher numbers of new highs. Did want to mention one more time the demographic study that we've done. If you go back and study demographics, you find that there's a really direct correlation to long-term bull markets. So this particular long-term bull market that started back, really got going around 2010, 2011, the projection is that the oldest millennial will turn 35 in 2016, which was right here. And then in 2035, the oldest millennial turns 54. So the whole idea here is that the millennials, 60% of our economy is retail consumption. So the millennials start consuming at age 35. They start buying houses, buying cars, having children, and so forth. However, at age 54, the spending tends to peak. So we're of the opinion that the market will stay in an uptrend for 12 more years. Would be nice. Energy stocks, just want to point out again, we saw how the price of oil is dropping. Energy stocks have broken below the 200-day and have gone into a downtrend, so be aware of that. I just wanted to show a couple of stocks that you can kind of understand the kind of patterns we're seeing out there that are very favorable. This is an uptrend. This is CrowdStrike. We do own the stock. Cybersecurity. You can see here back in September, it broke out above a base, and you always want like a nice flat base. Heavy volume came in, you got a breakout. Stock continues to stay in an uptrend, actually gave a new gap up here recently. So cybersecurity is looking good. Pulte Homes, these are the home building stocks. They are acting favorably. Mortgage rates are coming down. Millennials buy houses, so that's another reason to own it. But you can see here that we got a buy signal here recently in the beginning of November, and it's almost like a stair step. Up to a stair step, up, another stair step. This is a very nice pattern. So anyway, I just wanted to mention Pulte Homes and CrowdStrike. We do own both stocks. Thank you very much.